Good morning, good evening, and good afternoon, everybody. It is Thursday. You know that means it is time for high probability short term profits with Mike Wade. Today, we're going to talk about a quick market review. We're going to talk about this global trade war that's intensifying. Man, it's almost to a point where it's like a fist fight. I mean, it's getting physical out there. It's crazy. We're going to talk about the snipers portfolio, still at that 91% win rate. I said that almost like disappointed, but it's phenomenal. We're going to go through some recent trades, talk about Jabil circuits. It's not quite filled yet, but we're going to give you a little update on that. We're going to give you a current trade, talk about what we got going on today, and last but not least, we're going to get to some of your stocks, some of your charts, that kind of stuff. As you can hear with the cicadas in the background, Mr. Mike Wade is with us. How you doing today, sir?
Let me shut the window. I've got used to it, but in Costa Rica, they're super loud. I went out last night with the dogs, and I literally had to close my ears because it is deafening.
Oh God.
I'm inside, and you can still hear it, right?
Yeah, that's crazy. It's not as bad, but that's funny.
Oh, they get louder later in the day.
Jeez.
Yeah, it almost rattles the windows.
I bet.
How you doing today, man?
I'm doing all right. How about you?
I'm doing great. I'm doing really great. I just got to give you my commiserate with you for the Clemson loss. I'm a Clemson fan as well, and that was tough, brother.
Yeah.
Sorry about
it turns out if you score 13 points and a half, it's actually pretty hard to win a basketball game.
That's not enough.
And then we scored 54 in the second half. Like all we needed was just 10 more points in the first half, and we would have won.
No.
But
no, they probably just.
I'm over it. It's fine.
Yeah. Well, I'm still following. I've got Duke to win the whole thing against Florida, so that's my bracket. And so far, so good. We'll see. You mentioned some kind of trade war, something like that. Well, yeah. It is crazy. I've never seen anything like this before. Let's pull up that little graphic there. And it's like, you got to be careful with politics, but, this is like almost violent, like 25% tariffs, raising tariffs 25% or to 25% is just unheard of. And then right below that main headline there, it says Trump threatens for far larger tariffs if Europe and Canada unite to do economic harm to the U.S. So tariffs are being used as a tool, like a war. It's literally like an economic war. Germany is upset with us because of the auto tariffs that were levied this week. Internally here in the United States, RFK is wreaking havoc in the health department, the health organizations within the United States. RFK is also bearish on pharmaceuticals and drugs and vaccines. The U.S. oil executives are bluntly criticizing Trump tariffs and baby drill. So everybody's upset. Tariffs do nothing more than make stuff more expensive. That's what gives us a higher inflationary risk, and all of that has an impact on the stock market. Here's a chart of the S&P 500. I'm tracking the SPYs, which is the ETF that tracks the S&P 500, and you can see already we've been in this downtrend, and this is when all the tariffs really kicked in. We thought we were going to get tariffs here, and then Trump changed his mind, and now they're back. And they might be off tomorrow. So it's really creates a sketchy market or a volatile market. And it's difficult to predict direction when the tariffs are changing so much. So you got to expect anything. Have a prognosis. It might be different tomorrow. So the best we can do to navigate is, number one, be ready for big surprises. So you got to be practicing money management, use your stop losses, maybe make them tighter, perhaps. And now, with all that said, we can still begin to derive some level of a prognosis. And this is what I'm going to say. All right. So we came down about 10% on the SPYs. hit 550 almost exactly. Strong support down here at 550. I call those lines in the sand. So that's strong support. And then we got this bounce back here mid March or so, about 2 weeks ago. And we had a nice little bounce. But what I was noticing on the bounce is the volume here, which I call institutional conviction, was dropping as the markets were bouncing. We did get two closes right here above the 200-day average. This blue line is the 200-day average. We got a higher close there. And I was ready to call a bounce, but I waited because on these 2 days here, that one and that one, the volume dried up. And then yesterday, the SPYs collapsed well below the 200. The volume was higher than the prior day. So it looks like the markets want to drop a little bit, maybe a lot. I say 560 is the next target. So my guess, my educated guess, is that 560 is in the cards in the next handful of trading days. And if it continues to breach, it breaches 560, next target is 550. And the other target, and I know Rob Roy is leaning on this as a target, and I have to agree with him. I think it's quite possible, even likely, that we'll be down to 540 in the coming weeks. So my stance is bearish, but if I see I can use this SPY chart to maybe change that prognosis, if I see the SPYs close above the 200-day average and I get some volume especially, then I could say, all right, I think we might be making a run to the next resistance level. So Ryan, that's where we're at. And, you know, it's a little treacherous out there right now. And one way to manage the treachery is credit spreads. Snipers, in fact. We can sell credit spreads away from the heat, away from the stock price, and give ourselves probabilities in excess sometimes of 90%. And indeed, if you look at our performance here, you'll see that that's our run rate, Ryan. It gets kind of boring, doesn't it? Oh, yeah, 91%. That's what it always is. It's usually around 90%.
Yeah, ho hum, blah, blah, 91%. Yeah. Ugh.
Yeah, I know. Oops, sorry about that. I went to the wrong screen. Oh, I don't know what's happening. There we go. Oh, we got the infinity effect happening there. Anyway, I think they saw it. I don't need to read it. There we go. That's what I wanted to see. Thank you, buddy. So we've done 64 trades since we started the Sniper Show here on Thursday mornings. 58 of them have been winners. Only six losers. That's where our 91% win rate comes from. And our average profit per trade percentage, and this bakes in the losses, is 9.81% every 5 days. Now, you might be saying 9.81%, who cares? Well, first off, if you did that every month, that would be awesome as a trader. Talk to a hedge fund and they'll tell you that they're happy if they make 10% a year. So that's really good, and it gets better because it only takes 5 days on average to get in and out of a trade. So you could literally take whatever you're investing and use that same money 4 times in a month. And then those returns obviously magnify. So that's the approach. High probability short-term profits. It's a mouthful, but it's a delicious mouthful. And we've been at this for, I don't know, Ryan, about a year and 4 months or 3 months or something. So over a year we've been doing this, and I've been doing this for a long time. And this is generally the run rate. About 10% every 7 days, 90% win rate is what we do here. And now we do use credit spreads, which are perhaps a little bit more complicated than the average stock trade, certainly, but perhaps even it is actually even more sophisticated, let's call it, than just calls and puts. So with that said, Ryan, you mentioned, you know what I do? I want to show one of the other things. So that RFK's stance on healthcare is bearish for the health market, but particularly the biotech industry. All right, vaccine companies in particular. And if you look at, that's not what I want to show you. I want to show you XBI. Okay, so XBI is the ETF that tracks the S&P 500 biotech stocks. and you can see how they've been doing since this downtrend here. This was right after the election when RFK got in. Everybody knows he's bearish on pharmaceuticals, and we got a massive correction, and then we have a string of lower highs and lower lows. This trend is decidedly down. And the last 2 days, we got two big down days on above average volume. Volume increased as this came down, and I would imagine we'll see XBI lower still, since that news that RFK is slashing 10,000 jobs in the health department in the United States. So that that alone there would be a decent credit spread. And I wasn't, you know what, Ryan, I wasn't even planning to talk about this one, but I think we should, and we will. I've got another trade I do want to talk about here in a minute as well. So, the other thing is Jabil Circuits didn't fill last week. We had a bullish credit spread. I had the trade on for the order on for a day, and on this day here when the stock gapped up, and it is coming down a bit. We could still probably get into this 125 put. We'll take a look at it and see if we might get something there. So I want to talk about. I guess we're going to do 3 trades today, Ryan, because I can't help it.
Let's do it.
I want to share, man. I want you guys guys and girls all to get this. This is a free show. There's a free guide that we'll talk about towards the end of the show. You can grab it and you can read it, and it will guide you through all of the steps that I take live here every Thursday morning. And we do have 3 minutes before the market opens, and none of these 3 are today news based. These aren't news earnings based trades. These are other types of news, which are also highlighted in the guidebook. All right. So that all said, let's just stay on this chart. The stock we placed a trade last week. That would have been 1, 2, 3, 4. This was the day we placed the trade last week, and the stock came down a bit, and we didn't get filled on this day. We could have gotten filled on that day, most likely, but my prognosis at the time was that the stock would stay above 125. That's this purple line. That's my line in the sand. And here's the deal. Wouldn't it be cool to be able to make money anywhere above 125? What does that mean? Well, the stock could go sideways, up, and down a lot, and we would make some money on this trade, about 10%. And there's numerous support levels that the stock would have to breach. It would have to breach 140. Look left, bounce, 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 bounce. That's a strong support level. And then 130, look left, support, resistance. Look left. And then your eyes will eventually start seeing these lines in the sand over time. I don't even have to think about it. It's like, I just see it. I don't have to say, oh, well, where did it pivot? I just see it. And that will come in time. And then, so with that support level at 130 and 140 and the 200-day moving average, let's go underneath even further to 125 and look left. Boom, resistance, close to support there. So I still like this one, and let's go for it. We've got 1 minute before the market opens. So what I'm going to do now is go into a simulated trading environment. Okay, so this is Thinkorswim. I'm not recommending Thinkorswim. Let's be clear about that. I'm not recommending Thinkorswim, but what I do like about Thinkorswim for teaching is that I can do a simulated trade and not take it myself, and you can see how to trade place a live trade. All right, so we've got let's put up the stock, of course, Jabil, and I want to sell the 125 put spread, and we've got 21 days. So we got the April 17 options. These are all the expirations that are available for this stock. We like to get in about 14 days, but sometimes 21 days is max, sometimes 7 days, sometimes 4 days, depending on the amount of credit we can get. All right, so what I'm going to do here then is put an order in to sell One, JBL is a symbol, April 17, 125 put, and then buy, same stock expiration, the 120 put, and I can see right here that it's showing a debit because the slippage is still pretty wide at the open, but you can still drop a hook in the water for your minimum credit, which is always going to be 10%, minimum 10% of the width between the strikes. So there's $5 between the strikes. So 10% of $5 is 50 cents. So I'm going to put that in here. 50 cents credit. I'll make it a GTC. And if you make it a GTC, you got to watch your GTC order all the time because you may decide not to take the trade if the stock is dropping super hard. If it gapped down below the 200 tonight, tomorrow morning, you don't want to put this trade on, of course. So you got to be careful if you're using GTCs to enter a trade. Right now, the mid price is showing 12 cents. I want 50. Give me 50 or give me nothing. And I'm fine with that. So let's drop a hook in the water. Boom, boom. And let me give you this. Let me give you this trade in a more easier format. JBL. And the expiration is April 17. And we're selling the 125 puts. And we're buying the 120s. All right, to do this for no less than 50 cents. This is why I didn't fill last week. This is what you're seeing here. We'll have to see. The stock's going to have to come down a bit before we get filled, but it certainly doesn't hurt to throw the trade on. Now, once you're in any trade, and here our stop loss is going to be always if the stock closes on the wrong side of the line in the sand. 125 is our line in the sand. That's our short put corresponding to our line in the sand. And the loss exit, most important exit, is if the stock closes less than that, 125. I just got filled on something. I'll have to go see what that is in a minute. Get out and manage your risk. You know, that's the job one in trading is risk management. Manage your risk and let the winners take care of themselves. It'll rock your world if you truly adopt that stance. And then the easiest exit is the profit exit. And then we just put a GTC good till canceled order to buy the spread back for 10% of the original credit. What's that? Well, that's that. That's the amount of money that you sold the spread for. And then that order sits in there, in this case, for 5 cents, 10% of 50 cents. And that will fill automatically. So your profits will come off automatically with this system. All right, so there's one, Ryan. Now, I mentioned XBI. Let's go to XBI next. The biotech. Let's see what this one's doing here. I can get it. There we go. All right, now where do we want to sell on biotech? Well, you can see we're coming down pretty hard. Let's go after 90. Now, let's talk about that. So again, the idea of the line in the sand is, in this case, I want to make money anywhere below 90. Okay? And what's going to stop that from happening, if the stock starts bouncing, are support and resistance levels. Okay? So looking left, you can see there that we have a level of support resistance there, also right about here. And then we have the 50-day average. So because we're going so far away, there's a decent amount of credit. All right, now let's go ahead and see what we can get there. So I want to sell the call. I'm going to sell a call spread at 90. All right, let's go take a look. What's there? I don't know. I do know that there's nice expiration date granularity. And here's all of the option expirations that are available. And one of the rules we use, everything's rules based here, is we want to use a 2-week option, 14 days roughly. And you can see here we have a 15-day expiration for April the 11th. Let's grab it. And then because I'm bearish, I'm going to use calls. That sounds wrong, right? But we're selling them. So that makes selling a call the opposite of buying a call, and that is a bearish trade. So let's see what's there. 90 is my short strike. And I'm seeing enough credit. Let's do this. Let's look at selling the 90, 91. Okay, oh my gosh, there's 17 cents credit there. Now, because there's 17 cents credit there, I could say, well, maybe wouldn't it be nice to make 10% in 8 days versus 15 days? The 15-day trade offers 17 cents. If I drop it to 1 week earlier, now there's only 5 cents there. Okay, now if there was 10 cents there, I would do this one over the one offering 17 cents because I'd be in and out faster. But it's here. Let's go grab it. I'm going to get this filled before I give it to you, but I'll give it to you here. Sell 5, XBI, April 11, 90 calls, and buy the same stock and expiration, the 91 call. That's the one higher. Right now there's 18 cents. Let's confirm and send, and let's see what we get. Let's see if we can get that filled. All right, I got that order in. It's showing 18 cents, and that's the mid price, a little higher. Let's let that sit. If you want to get a fill right now, because IV does come out as the market gets into the trading day, so I'm not going to get too greedy. Let's drop it to 17 cents. And let's see what's happening. Okay, it's not filling just yet. I could be patient. I tell you what, let's just grab 15 cents. You might just be more patient than I'm being. I just want to show you what a fill looks like. 15 cents, I'll leave it there. And fill me or not. This is not a super time sensitive trade in that it's not news based, so we could always go after it tomorrow. So we got Jable on for 50 cents. Current price is showing 22.5 cents. We've got the XBI trade in for 15 cents. Current mid price is 17 cents. All right, there's a good chance that one will fill here even on the call. So that's a second one. And the third one I want to show you takes advantage. I don't do these super often here, but you do know that I'm using the Hub software, and it's a beautiful charting package. I really like it. We just got filled. Before I continue, let's see. All right, so we just got the XBI for 15 cents. So that trade is filled. You can see there, we got it for 15. All right. So that's a good looking trade in my view. So back to the Hub software. I'm using the software in front of you every Thursday. And one of the things that's mega powerful about this software is that it employs true artificial intelligence, actual artificial intelligence. And this chart here is suggesting that Nike's been in a bearish trend. They had bad earnings. And despite all, and they got taken behind the woodshed and beaten severely. The stock tanked. It's dribbled back down. Looks like it wants to bounce a little bit today. And there's support at 65. Anyway, I'll come back to that. So what this is saying here is that, means recenter this so you can see it very clearly. All right. So what this chart, this AI signal here is saying is that this stock has about a 14% chance of reaching the target price. You can't see that probably. That says 62.58. Okay, so this is saying that there's a very small chance that this stock will come down to 62.58. All right, so if that's the case, and I know it's the case, I know it's reliable because I've been using the AI signals for over a year now, and it's uncanny how accurate they are. And I wouldn't take the trade if I didn't trust how accurate they were. So let's do a case study on a Hub AI signal, and let's go right into the Thinkorswim simulator, and let's type in Nike. And again, same formula. Start with the 2-week options, 15 days there. That's close enough. And let's see what we can get at 62. Oh my goodness. There's 15 cents credit there. Minimum credit on this should be 10 cents, and there's 15 cents. That's excellent. Let's go ahead and do 5 contracts. We're going to grab 15 cents. It's down to 14. Don't get greedy. 10 cents is enough. So let's put it in for 14 cents. I would even take 10 cents on this one, but 14 cents, if we can get a little extra, would be better. So let's let that marinate for a bit. And let me show you this trade, April 11 on Nike. Okay. And we're going after, let me see where the price is. Now the price is 13. Let's not get greedy. Let's grab it. Nike's running up a little bit this morning. So let's just take 13. I'm going to put it in for, let's put it in for 13. If I don't get it right away, I'll put it in for 12. Got it. All right. So you just saw what I did, right? The mid price was dropping. I know IV options get less expensive as we get into the market day. So I knew that credit was in jeopardy. So I grabbed it. So I lowered the credit, tried 14, and then went to 13. We got 13. So I relaxed the price to facilitate a fill. And you can see here, we got filled at 13 cents. So that's 2 trades on the board. We have another, look at Jabil Circuits. The trade is now going for $37.50, and the current price, the price I'm asking is 50. So we're about 14 cents away from a fill on this one, or 12, 13. We're pretty close, and that's a good looking trade. Now it's at 40 cents. So Jabil's coming down a little bit, looks like, and be patient. And that would be a very good trade as well. Ryan, we haven't done 3 trades in a long time, but I had to.
You're spoiling us right now, Mike.
I know. We didn't get a trade. We haven't had any trades in a couple of weeks, and Jabil didn't fill. So we wanted to go back after Jabil, and because we haven't had many trades this month, we now have 2 more. So we're back on track with. We try to do at least get one filled every week, and we are now caught up, I think. So with that, Ryan, I'd like to go over to the guide real quick and just remind everybody that there's a free guide here. I call this the sniper system. It's a catchword for high probability short-term profits. And this guide is, I wrote the guide with an eye on creating something as simple as possible, yet hit all the major points. So there's a 5-step process that's illustrated. And I mean, by illustrate, I mean pictures. It's really easily written, easy to read. It talks about how to find opportunities, how to derive your lines in the sand, how to build a credit spread, a bullish one and a bearish one, and then most importantly, how to handle these credit spreads. How do you manage these credit spreads? All of that is written in the guide, and you can get it for free by going down to the link below and just give us your name and email address, and we'll send it to you. And then you can read it, and then come and join Ryan and I every Thursday at 9:15. All right, Ryan. So the guide's been done. We've got all our material covered. Do we have anybody that's looking at any opportunities?
James said gold /GC. I don't know if that means any. I don't know. I don't know what that means. Is making new highs. Not a snipper, but interesting.
Not a snipper or a sniper. You say snipper and I say sniper. Yeah, gold is also another. Gold is at all-time highs. /GC, Ryan, is the futures, and GLD is the ETF that tracks gold.
Ah, okay, cool. Gotcha.
Yeah, just so you know. But there's all-time high territory right there on gold. All right, so gold is in what many are deeming a risk-off stance. What does that mean? It means risk on is money in the stock market. Risk off is money in safer markets like gold, bonds in a healthy bond market can be risk off, safer assets, in other words. And yeah, gold is a really good one. I like gold. I'd say 270 would be a good one. I'm just looking at support resistance. Let's get bigger line in the sand. I tell you what, you know where I really like it is right here, right at the top of this bar there. And what's beautiful about that level, and let's make it exactly 272. I like to use round numbers because the institutional humans think in round numbers and they program their computers to trade to and at round numbers. And so that was all-time high territory. Gold took a break, had a little basing pattern, almost a cup and handle, almost cup, handle, but the handle's not high enough, but still pretty close. And then we get our ba-boom move to all-time highs above this 272 level. Look at the volume here on that day. It's massive. So I like this one at 270. I think selling a 270 put spread on this would be a very good trade on gold. So sell the 270, buy the underlying, which would be 269. Sell 270, buy 269, and do about 14-day trade.
Perfect. Awesome. Let's see here. We got Tony is asking about GM, and I know with the tariff war going on, I know that might be an interesting one, along with every other vehicle sales out there.
Yeah, I know, Tony. Yeah, what do you think the impact of what I was showing earlier is going to be? Aluminum prices, tariffs on cars not made in the U.S. But the other thing I didn't mention is Trump put a massive tariff on aluminum, and it's just going to make things more expensive for General Motors. So that's this understanding the economy and what's going on in the world can give us really good directional edge. And Tony, who's in my snipers community, hey Tony, good morning. Tony lives in California, and I know he's up early. But you know, I like it at 50. I think this would be a beautiful setup at 50, selling a 50 call. Look left, boom, boom, resistance, a little bit of support resistance, support there. It failed and it came down. And a lot of bearishness in this chart. One, the gap from yesterday. Right here, if you look at these red and blue lines, what we have here is the 50-day average, the red line, cross below the 200, the blue line in a bearish, we call that a bearish cross. And we also have those levels now become resistance. So those levels will provide a level of protection against the stock ever touching 50. So I like it at 50. If you can get 10% a little bit higher, maybe go to 51. But I would say no closer than 50, but step away a little bit, maybe up to 51, 52, and ideally 53. That's a no-brainer. And then I would say move it as far away as you can and still nab 10%. Check out the big brain on Tony.
Oh, yeah, absolutely.
A good trade.
Cool.
So was the gold trade. Yeah, really good stuff. I think our community is learning some things here.
Yeah, I think they got a good teacher.
Yeah. Who's that? Who, me? I love this, Ryan. I really love bringing this game to people, and you know the context that it's a game is really, in my mind, very powerful because there's a lot of emotions in this game, but it nonetheless is a game, and it has rules. You play by the rules. If you manage your risk properly and with great integrity, then you have a very good chance of repeating the kind of results that we get here. And that's what I want for everybody. I want everybody to win, man. All right, Ryan, you watching any March Madness today?
Oh yeah, all of it.
Oh, man. All of it.
Gotta get some work done, and then I'm gonna have it on every single monitor that I have.
All right, brother. It's always a pleasure to hang with you, man. And y'all have a good weekend. And we will see you again next week at 9:15 a.m. Eastern Standard Time. So have a great weekend, everybody. We'll talk to you soon. Pura vida.